Wasabi wallet. Unfairly private.
What's up, everyone? Ben with the BTC Sessions here, and this is your daily session.
Hodl that Bitcoin.
Before we jump in, of course, shout out to sponsors of the show, LEDN.io. This is where you can use your Bitcoin for a variety of different services. The first of which is a Bitcoin savings account, so you can earn extra Bitcoin on your Bitcoin, paid in Bitcoin. Convenient. Secondly, Bitcoin-backed loans. So if you're in a pinch, maybe you don't want to sell your Bitcoin, but you do need cash, well, you can use your Bitcoin as collateral for a US or Canadian dollar loan. And this is a non-taxable event, so that's a positive. Also, your Bitcoin is locked in a dedicated account and it stays there, the exact same Bitcoin, until the point at which you pay back your loan. So if you're trying to get your hands on cash, this might be a good option for you. And finally, if you're a huge Bitcoin bull, you can check out their B2X offering. That's where you can expose yourself to double the get double the exposure to the price of Bitcoin. If you want to check out any of these, there's a link down below in the show notes. And if you opt to get a loan, they'll actually give you a credit of an additional $50 worth of Bitcoin. And secondly, very excited to have Rise Wallet working with the show. This is exactly what it looks like. It is a Bitcoin gift card. It's super easy, super idiot proof, and I personally think it's a great way to onboard new users, whether it be for like a Christmas gift, birthday gift, or just a for fun gift. But basically, it has a paired app. You buy one of the cards at a location near you, you scratch off the back, you scan the QR code, and the app itself creates a brand new personally held Bitcoin wallet and sends you a Bitcoin transaction for the face value of the card at the time of redemption. So if you want to check them out, head over to risewallet.com and click on locations to see where it's available near you. It is currently only in Canada, but if you're in Canada and you're looking and there's not a spot near you yet, they are expanding, and you can also grab them for order on coincards.ca. And with that, let's dive into the news. Wow, the price of Bitcoin has been tanking the last little bit. Now, this article here is from the other day, but we are down in the 6,600s, I believe. So it's been a sizable drop. The reason I'm pulling up this article first is to give some context as to what could be happening, or at least helping the price dump snowball. Obviously, yes, we saw a sell-off the other day on Monday. We were up around the 7,000, 7,100 mark, and then we had a dip of around 3% down to 6,900. That's obviously continued today, but we'll get into that in a little bit. So the cause of the Bitcoin price drop can possibly be largely attributed to the Plus token scam, which was a China-based Ponzi scheme, essentially promising large monthly returns in exchange for deposits of Bitcoin. So essentially, they were coaxing people into, one, buying Bitcoin, which very much had an impact on the pump in June. And then when the money was in there, they promised them returns and kind of basically gave them whatever percentage per month, something that was just completely infeasible when it comes to standards of investing. And the thing was, obviously, they were paying old users with new users' money, and there was no actual like trading or returns going on. They were just taking in the money. Well, as they're starting to sell all of their ill-gotten gains, well, that is obviously dumping the price. So that's why we're starting to see even more sell-off. Now, part of it is there was a thing from Chainalysis that basically called out, okay, well, this is the reason for the dumping. It's coming from these Plus token scam wallets and being dumped on exchanges. Well, that continues, yes, but then obviously from that report, it may have spooked others into selling Bitcoin as well because they're anticipating further drops. So one thing I did want to note is that the longs on Bitcoin, so people betting that the price of Bitcoin will rise in the future in relation to where it is now, has reached a new high. So it past the previous high of 40,000, over 40,000 contracts. It's now about 44,500 contracts, assuming that Bitcoin is going to be long. So this could denote that people expect a bounce off of around the 6,500 level. But I guess we'll see if that happens. So obviously this wasn't contained to just Bitcoin. Altcoins are bleeding, and in most cases, much more than Bitcoin. So Ethereum, Litecoin, and EOS are hitting 10-month lows. Just not looking very nice. Ethereum is below 130. XRP is a 2-year low. So they've finally dropped below 20 cents. And obviously with XRP, it doesn't help that Ripple Labs is just regularly dumping tons of Ripple or XRP. It's all the same. XRP is Ripple. Ripple is XRP. Yeah. Einhorn is Finkel. Anyways, so it doesn't help that Ripple Labs is dumping a ton of XRP on the market every single month. So yeah, and let's take a look across the board. This is kind of, let me refresh here. Again, by the time this airs, it won't matter anyways because things will have changed so drastically. But regardless, so we're seeing, Bitcoin is down about 4.5% on the day, 68. I did see 6600s earlier, but again, that can vary. Obviously, it can bounce around quite a bit. But everything else, you're looking, excluding Tether because obviously US dollar pegged. But everything else is more or less at least doubling the losses of what Bitcoin has been hit by. You see a few double-digit drops from like Binance Coin and like Stellar and the less notable ones down below. So they're getting hammered. And this tends to be the trend time and again, especially all through the bear markets. When there are drops, the altcoins get hammered twice as much. And when this happens and it compounds over and over and over again, people that are sitting in altcoins are compounding their losses. Yeah, absolutely. Bitcoin has taken a hit from its all-time high or even from the high of this year. But again, if you go back a little bit, you would see even a year prior, we're still double what we were as in December of 2018. So when in doubt, zoom out, as always. But these alts are getting crushed, especially in relation to Bitcoin. And so let's take a look at what that looks like here. So I've put together a chart here of a bunch of different cryptocurrencies, basically the top 15 minus Tether, because why include that? So I've got obviously US dollar price, but then the price in Bitcoin and the change in price versus Bitcoin. So obviously you're just going to see one Bitcoin is one Bitcoin and across this. But if anything lost more in dollars as compared to Bitcoin, then that means it's also valued less in terms of Bitcoin, right? So what you're seeing is in the past day, with only a couple exceptions, everything is down 3, 4, 5, 6%, 7%, some of them, in terms of Bitcoin. So had you been holding onto Bitcoin, you wouldn't have experienced nearly as much of a loss. Same when you go past that. Obviously, there's a couple notable exceptions here, and those tend to be some of the newcomers that have just kind of either launched their main chain or that were just recently created. So you see Cosmos, Leo, and Tezos, which appear to be the exceptions to the rule. But when you look at this sea of red, what are the odds that you're going to roll the dice and get the one that just happens to pump? Not great, especially in the context of a bear market. More or less, if you're diversifying, you're just compounding your losses. And what does all of this do to Bitcoin dominance? And dominance is a measure of what percentage of all cryptocurrencies does Bitcoin account for as far as like dollars floating around. And so this is the chart since the highs. So the end of 2017, we saw Bitcoin dominance kind of hit its low. It was like 30 something percent down here, 33%. And then the bear market hit. And then that's when these alts started to get absolutely crushed. And you can just see that Bitcoin dominance just starts to grow and grow and grow. And all of the other coins start to slide and slide. By the way, this second line here is the aggregate of every other coin that isn't the ones listed at the bottom. So like Ethereum, XRP, Tether, Bitcoin Cash, Litecoin. So all of the top 10 kind of coins, but this other top line is all of the other coins. So you can see at the bottom where it says others in this list. So back when Bitcoin was only 32% dominance, all of the other coins outside of like the top 10 accounted for 28% of the entire cryptocurrency market. Flash forward to today and you see all of the others account for about 11%. So it's been sliced substantially, not quite by 2/3, but it's getting there. So all of those little tiny side projects have more or less just disappeared. And then you see some of the top coins. It's interesting to see how the money flows here. So like here, back in the day, XRP was 10% of the entire cryptocurrency market, whereas today it's around just shy of 5%. So its dominance got cut in half. Same thing, you see Ethereum, 18% of the market at one point, almost 19%. And now Ethereum is 8% of the market. And again, Bitcoin Cash was 5%, even 6% of the market. And then you go down and Bitcoin Cash is 1.9% of the market. And you see these slides and you see, yes, there's other coins that have popped into, like obviously Bitcoin SV did not exist. Tezos had nothing. And then, now they're sitting at like, what? About 1% and 0.5% respectively, but still, like the money by and large is not flowing out of Bitcoin into other coins, is flowing from other coins into Bitcoin as people kind of see what is having staying power. And as I suppose, as use cases that all of these other coins were built for are gradually introduced as layers of Bitcoin. So I anticipate to see more of this in the future, though I will say that in a bull market, rationality is not really widespread. And so when you see a bull market, of course, random coins that people don't quite understand the implications of or trade-offs of are going to pump because retail investors don't really understand the deeper, anything deeper than the price movement. And so they're going to see something go up a little bit or see a low price in their eyes, as people saw with XRP. Oh, it's only X number of cents. I'm going to buy some. Oh, it's only $3. I'm going to buy some. And now it's sitting at 20 cents. You are going to see some of that sentiment come back, just as you do with a lot of the scams that come out too, that seem to proliferate when an influx of new users, of new retail investors hit the market. Anyways, in the same vein of scams, let's move on to this other story here. So a while back, a couple Canadian guys went on Twitter and pretended to be HitBTC, which is a trading platform. And essentially they convinced a woman to hand over her credentials for her account. And they then proceeded to go in and steal, how many Bitcoin was it? It was around 23 Bitcoin, which at the time was worth $140,000. Of course, that's the price of Bitcoin has gone up, but at the time they milked her for $140,000. Well, those guys were caught, and they are at trial, and they face up to 2 years in prison for doing this. So not looking great for them. As far as the victim actually does feel sorry for them. So she says, I feel sorry for them. I have a son that's 27. I hope they can turn their smarts into something beneficial. She also did say that odds are she's going to be getting her money back at some point. So, yeah, you know, a couple things to learn from this. Obviously, these short-term gains for them were not worth the couple of years they could face in prison, because obviously they're not going to keep it. So, and the other thing is just be conscious and diligent when it comes to people trying to get your credentials, fish your credentials from you. There's a lot of people that will not stop at anything to get their hands on your Bitcoin. And it's irreversible. Once they've got it, it's pretty much gone, and they can do with it as they please. So be cautious. Don't give away login information for anything. Moving on here, Fidelity Investments, they do have a Bitcoin arm that they offer to their clients, and they are expanding to Europe. Namely, actually, they're looking at planting down in the UK. Now, even this is, so they're focusing on Europe, and this is despite the possibility of a Brexit actually happening. Yeah, they're still setting down in Europe. So they have $7.2 trillion under administration, and yeah, so they're looking to expand. They do just focus on Bitcoin right now, although they are looking to expand into Ethereum in 2020. Given what we just talked about, we'll see how fruitful that endeavor is. Anyways, so the reason I wanted to bring this up is it's interesting to see, given the price action for the second half of the year, who is ducking out and leaving and who is playing a long game and actually saying, okay, well, this is the time to build something. This is the time to set up shop and prepare. And a lot of people that were able to weather the bear market last time around and use it to build ended up being the big players now. Kraken is one that comes to mind for me, because they were... they've been around for quite a while, but the bear market of 2014, 2015 almost killed them. They almost had to close up shop. They just really had to cut back and downsize and keep it a lean operation. And now they're massive, right? They're one of the big players in the space. So I think that the guys that are going, hey, let's expand and allow for more onboarding in various jurisdictions and get set up, well, I think those guys are the ones that are going to be kind of the key players when it comes to the institutional roles and the more traditional investment routes. Fidelity seems to be positioning themselves to be one of those, whereas the ones that, you know, you saw the rumors of crypto trading desks at various institutions like Goldman Sachs, and then, you know, the bear market hits and they go, yeah, we're not looking at that anymore. Those are the guys that are going to be trying to play catch up when things turn around and we get back into another bull cycle. They're the ones going to be going, oh shit, we actually should have been putting some resources to this while it was quiet, in anticipation of a bull run, and now we're going to waste all this time building infrastructure while the prices skyrocket and everybody else takes the business. And then my guess would be the slow ones are going to be just launching at the tipping point as we move into the next bear market. But hey, we'll see. Either way, good on Fidelity for continuing to grow this in the midst of what some people would consider like an apocalypse. And finally, this is a wallet, Lightning wallet provider that I quite enjoy. It's called Breez, B-R-E-E-Z. It's a non-custodial Bitcoin wallet that you can get on your phone, both iOS and Android. And you don't have to worry about channel management. They will open an incoming channel with you. And I've found it to be pretty seamless. And routing is getting better. You know, if you run into issues here and there, those are becoming more seldom. Anyways, they are working on a Lightning point of sale terminal, which is going to be rolling out in terms of an app in 2020. And so there's already some merchants that are testing it out. There's even like a video game shop in, where the hell is it? There's a video game shop in, is it in Silicon Valley? I think so. Anyways, so they are actually testing with it. They may have it set up as soon as this month, the end of the month in December. So it's cool to see the proliferation of, okay, well, payments on Bitcoin make not as much sense when the network gets congested. So let's start to make point of sale terminals that are accessible via Lightning, which lends itself to that transactional nature. So I'm very excited to see this start to roll out. Again, take it with a grain of salt because one, you have to have somebody that has Bitcoin that's walking into a brick and mortar store that also accepts Bitcoin, but also you have to have that person that has Bitcoin actually want to spend it. And I think while you get some cases like that, by and large, a lot of people in Bitcoin right now are looking at it as an investment. They're looking at it as, I'd like to hold on to this for a number of years because I think that the purchasing power of it then could be higher than it is now. So is this a tad early? Maybe, but hey, maybe like the usability of something like this will lend itself to, again, that transactional nature and it will get picked up. I could be wrong. So I suppose we will see. Anyways, guys, I'm going to wrap it up there, but I'm going to say thanks for watching. Of course, hit like, subscribe, and share. As always, if you want to help out the show in another way, you can hit up the sponsors down below, LEDN and Rise Wallet. And of course, while you're down there, be sure to check out Wasabi Wallet. It's always great to get some privacy on your coins, and they do something called CoinJoin, where you can break the links between you and your Bitcoin and keep those links away from prying eyes that may want to horn in on your financial privacy. And finally, if you really liked what you saw, you can always hit up my tippin.me page and drop me a Bitcoin Lightning Network tip. There's a link for that down below as well. With that, I am out. Have a wonderful day, and I will see you tomorrow for your daily session.